Welcome back to your ultimate pit stop, Piston Pundit. Europe thought it had engineered a clean break from Russian pipeline gas, swapping fixed pipelines for flexible LNG cargoes, like upgrading from a rigid drivetrain to a modular system. But now that system is being stress-tested under extreme geopolitical pressure. With the Strait of Hormuz tightening, Qatar's LNG output damaged, and global competition intensifying, Europe's energy supply chain is starting to look dangerously fragile. And for automakers, suppliers, and energy-hungry factories, this isn't just policy, it's production risk. Here are the developments, the risks, and the key pressure points reshaping the industry. Energy pivot collapse. Europe's LNG strategy backfires hard. Europe's post-2022 energy pivot looked solid on paper. Cut reliance on Russian pipelines, scale up LNG imports, and build a more flexible supply network. But this crisis has exposed the core weakness. LNG may be flexible, but it still depends on choke points, tanker fleets, and geopolitically exposed suppliers. Qatar is now a critical fault line. Reports indicate Iranian strikes knocked out around 17% of its LNG export capacity, with repairs potentially taking years. Qatar Energy has already declared force majeure on several long-term contracts, affecting buyers across Europe and Asia. This isn't a short-term delay, it's structural damage to the supply chain. At the same time, the Strait of Hormuz remains only partially functional. Some vessels are moving, but selectively and under political conditions rather than open market flow. Energy shipments now depend not just on price, but on alignment and access. For the automotive sector, this is a systemic risk. Modern car production relies on stable inputs, chemicals, metals, semiconductors, and energy. When fuel flows tighten, the entire manufacturing ecosystem feels the strain. Europe didn't eliminate dependency, it shifted it, from pipelines to LNG routes through a volatile choke point. And now, that choke point is dictating supply, pricing, and which industries get squeezed hardest. But supply vulnerability is only half the story, because even when fuel exists, timing and storage determine who actually gets it. Storage crisis deepens, Europe trapped in energy bidding war. The second issue is timing, and Europe is entering refill season on weak footing. Gas storage levels are significantly below normal, with some countries hitting critically low reserves. That's like starting a long-distance run with barely half a tank. The European Commission has already signaled flexibility on targets, but the real problem is market psychology. Once suppliers know Europe must buy, leverage shifts. The market stops behaving efficiently and starts acting like a bidding war driven by urgency. That pressure is already visible. US LNG exports have surged to record levels, attempting to fill part of the gap. But supply isn't guaranteed. Asia is now outbidding Europe, pulling cargoes toward higher-paying markets. LNG doesn't follow need, it follows price. So Europe isn't just competing, it's competing globally, and often losing the highest bids. For the automotive sector, this mirrors a just-in-time supply chain failure. Storage was meant to act as a buffer, but buffers only work if supply flows remain stable. With Hormuz traffic restricted, Qatar's capacity reduced, and shipping costs rising, every refill cycle becomes a high-stakes race. Panic buying pushes prices higher, and those costs ripple through electricity, logistics, materials, and factory operations. Europe isn't just buying gas, it's buying time. And right now, that time comes at a premium. And when energy becomes both scarce and expensive, the pressure doesn't stay in markets, it moves directly into factories. Before we delve deeper, do us a favor and smash that like and subscribe button. This helps us reach more auto enthusiasts, just like you. Now let's shift gears and steer towards our next point. Industrial fallout begins. Europe's factories take the hardest hit. This is where the crisis hits hardest for the auto industry. Europe's energy problem is no longer just about inflation, it's about competitiveness. Industrial output was already weakening, and rising energy costs are now amplifying that decline. Germany's chemical sector, a critical backbone for automotive materials like plastics, coatings, and battery components, has been hit hard as input costs surge. Think of it as a chain reaction. When chemicals become expensive, manufacturing costs rise. When costs rise, margins shrink. And when margins shrink, investment slows. It's like an engine losing efficiency across multiple systems at once. The supplier network is also under pressure. Major players like Bosch, Continental, and ZF are restructuring amid weak demand, tariffs, and the costly transition to EVs and software-driven vehicles. Add rising energy costs, and suppliers are absorbing shocks while already stretched thin. This is why production is shifting. The US, with expanding LNG supply, and parts of Asia, with more flexible energy strategies, are becoming more attractive. Europe, meanwhile, is balancing climate goals, security risks, and fragile industrial margins. That creates uncertainty for long-term investment decisions. For automakers, this isn't temporary, it's strategic. Once factories, supply chains, and tooling move abroad, they rarely return. But behind these industrial shifts lies an even deeper issue: who actually controls the energy routes Europe depends on? Hormuz standoff escalates, Europe's energy security illusion exposed. The final layer of this crisis is strategic and uncomfortable. Europe has long pushed the idea of energy autonomy, but the Hormuz situation reveals its limits. Keeping global trade routes open often requires military backing, and Europe has shown little appetite to take on that role. The result? A system where Europe depends on routes it cannot fully secure. That contradiction has real economic consequences. Shipping risk isn't just about physical threats, it's about uncertainty. If no one clearly guarantees safe passage, insurers raise premiums, operators hesitate, and trade slows. Even with some vessels moving, confidence hasn't returned. Many ships remain stranded, and flows are selective rather than stable. For Europe, this creates a fragile setup. Its energy lifeline depends on diplomacy it doesn't control, security it doesn't fully provide, and suppliers who may prioritize higher-paying buyers elsewhere. That's not autonomy, it's managed vulnerability. The macro impact is already building. Rising energy costs are pushing inflation higher while growth slows, creating early stagflation signals. For the automotive sector, that's a dangerous mix. Higher fuel and financing costs weaken demand, while rising input costs squeeze production. This isn't just about expensive energy, it's about how quickly energy insecurity can erode industrial strength and long-term competitiveness. And when all these pressures converge, the final outcome becomes unavoidable: a full-scale reckoning. Final verdict: Europe faces a brutal energy reckoning. The verdict is clear, and it's a tough one. Europe isn't just facing higher energy prices, it's undergoing a structural stress test that cuts across factories, suppliers, logistics, inflation, and consumer demand. The near blockade of Hormuz, combined with Qatar's damaged LNG capacity, has exposed how fragile an energy system becomes when the route itself is no longer secure. Europe may be better prepared than in 2022, but it's far from protected. And for the automotive sector, this is critical. Energy instability doesn't just raise costs, it reshapes where production happens. If this disruption continues, Europe risks not only importing expensive energy, but also losing parts of its industrial base to more stable regions. Now, we want to hear from you. Can Europe secure stable energy before more factories relocate? Will rising costs accelerate the shift of auto production to the US and Asia? How could this impact EV production and future car prices? Please share your thoughts and experiences in the comments below. We'd love to hear from you. For the latest updates on the automotive world and more in-depth analysis, subscribe to Piston Pundit and hit the notification bell. Thanks for watching, and see you next time. You can now check out any of the videos on the screen. There's plenty more to explore.